Good morning, ladies and gentlemen, everybody. It's going to be a beautiful day. The market has broken down. It broke down yesterday, but this morning is a back test. So we'll see if that continues to the downside. But for the moment, we are not long biased the stock market currently. We're neutral to bearish. I know. It's crazy. But yeah, so if market's going to go back to the long side, it's just going to have to be back into above here. But for the time being, again, markets broke down pretty much there yesterday, so that is the breakdown. Here is our back test. So for the morning, pretty much this was a good short entry up here, obviously, right? Hindsight 2020, if you will, but besides hindsight 2020, this is also the 50 SMA. So since this is the breakdown, this would be the algorithmic back test. So as long as the market is not, above it, then you can still be rejecting. And you guys get the point. We do this every single day. So for the moment, we're in a neutral to bearish market environment as it relates to SPY. SPY, SPX. Even the NASDAQ is down. So yeah, we'll just keep it simple. Market is in a neutral to bearish state, and today I feel like I got to find a better way to do these streams because there's so much information we talk about that needs to be known, but then just obviously gets lost in the translation of the stream. So I don't know. One of these days we'll figure out something better for that. But yeah, for the moment, I guess we'll just do what we normally do. A little arrow, some text. This was the 50 SMA back test. Market is in neutral to bearish state. Since yesterday. All right, so pretty much we're bearish below that point. I even have a short on the market currently off that back test up there. So it's already made some money. Now it's just kind of a trailing play. If the market continues to go down, great. If it doesn't, boo-hoo, is what it is. But yeah, so I got a small short on the market. I'm actually using an inverse leverage ETF currently for this one. But regardless, we're in a neutral to bearish state. So we'll just go with that until that's not the case. But yeah, a couple other important things. Obviously, the volatility index. We'll bring that down. So this is part of the reason why it's me. But part of the reason why I am also short biased the market this morning is also the volatility index, right? So if you look at the volatility index here, what do we know? Yesterday, right, we talked about taking the volatility index. Let's not talk about tomorrow. That's too much. So let's just again, basic stuff, right? Volatility market, where does the uptrend start? Right there, over the 50 SMA. So yesterday, where I put this green arrow, that was your 50 SMA breakout. So that's volatility entering an uptrend. That is fear being expressed in the market. As a result, what did you see yesterday? You saw your market tank, right? So again, yesterday, the market broke down enough that it brought the volatility market up to its breakout level. Then the volatility market broke out, so volatility is expanding, or volatility is now being expressed into the market. As a result, fear goes up, people sell. As a result, market go down. Okay? So, what we saw yesterday is the volatility market break out, go into an uptrend, and through the afternoon session and into the close, we saw the volatility markets decrease, so much so that they back tested the 50 SMA. Where's the 50 SMA priced at? $17.51. Let's go look at the pre-market session. And now let's see, where did the volatility market pull back to? Where is it at? $17.50. So again, remember, yesterday was a breakout of volatility. Afternoon, after hours to early pre-market session is a pullback to back test the SMA algorithmic structure change price point. We now hold it. This is a bounce in the hopes that the volatility uptrend continues. And as a result, your market puts in a lower high, as you see here, and goes down. Hence why I am short, or took a short play on the back test here. Because that back test it's just that, right? That is the back test, right? So if we look at here, so let's go look at the SPY a little closer. See where the blue line's at on this chart, and I'll enlarge it, but you see right here, right? That is overlapping the 50 SMA, which is right there. That's the 50 SMA. Let's go look at the pre-market session. There you go, right? So you can see how we control the markets based off of a couple things. I mean, there's a lot of things, but one of which is algorithmic SMA universal calculations along with specific time frames and trend. But ultimately, what you're seeing, again, from yesterday to today is a breakout on volatility, a pullback, and then so far, the volatility market is supporting the proper price point, as is the market rejecting its proper price point. So you can see it's literally the same pattern on two different markets, and it's just like inverse, if you will. So in a way, it's like volatility confirming markets, markets confirming volatility, etc. So nonetheless, we're basically doing a lower high rejection 50 SMA short in the pre-market session right now. That's what the pre-market high is. So you could basically call that pullback we're seeing today so far as like a 50 SMA rejection short, right? If you want to, make your toolbox or categorize your strategies or moments of markets, that's pretty much what you're seeing. Or you would be categorizing it as a volatility market, back test long, right? However you want to do that, but that's what's going on. So we'll roll with that until that doesn't work. How long is that going to go on for? Don't know. Don't make up the rules. I just follow the market. That's literally that's it. So yeah, that's what the market is saying right now. Is that it's a back test short. Now, there are some rules, other ones that, no, we're not going to get into it. But yeah, so this is the pre-market session. When the live trading hours opens, again, pretty much these are the two scenarios, that the market can only go up and it can only go down. So essentially, this is what's going to happen, right? If the market doesn't break down, meaning yesterday the market broke down here, this morning in the pre-market session, we're back testing. This is the pre-market, right? So if the pre-market leading into the open breaks down, then great, market can continue, right? But if the live trading hours wants to back test as well, then that just means we're going to see the market go right up to here, right? So think about it. This is the 50 SMA back test, but that's in the pre-market trading session. In theory, that's not in theory, in reality, that's not live trading hours, right? So basically, you have two different markets. All right, we back tested in the pre-market. Well, once the market opens, it's many times very likely that the live trading hours will also want to back test. So just because you see price come up here and back test in the pre-market, it's almost like you need both sessions to do it. You know what I mean? It's kind of like both of them want their run at the back test, right? So just because we see things back test or kind of move in the pre-market, we don't think the pre-market, I always see it as two different markets, right? And each market has to have their kind of opportunity at the game. So in a sense, this would be a short-term pre-market backtest play, right? Now down. Anyone who shorted pre-market, fingers crossed that at the open it just drowns out, because then the short plays great, works out well, myself included, right? The flip side is that obviously the market doesn't just drown out and it goes up, right? And if it goes up, the price points it's going to want to go to are going to be right here. It's going to be, that would be, oh wait, sorry. This would be the first thing the markets try to do. They're going to try to go right there, all right? Because A, that's the 50 SMA backtest, and then B, that's the volume weighted average price of everyone that's shorting this top right here. Anyone that's been shorting from here and down and anything, their volume weighted average price is, you know, like 690.55, right? So basically that's pretty much what's going to happen, all right? So anyways, that being said, yeah, so we'll stay bearish on this back test because I'm already short, right? So we'll stay bearish as long as the market is below this point like this. So we expect, right? We even expect the market to go up here. So even though we're short, we already expect price, if it doesn't go down and just drown out, it's just going to bounce right back to where we say so. And then it's at that point, if the market continues to maintain down, then the short may last. If we start to get above, we would start to say shorts are off, longs might be on, blah, 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 right? So on and so forth. So, cheers to you. Whoever, wait, what? Insert name here. Cheers, brother. Good to see you. Well, whoever you may be, but good to see you. Yeah, so that's pretty much that. You know. So actually, I should probably keep that on the chart, right? Just so everyone knows, right? So this, what I'm drawing right there, I know it doesn't seem like a lot, you know, and to a degree, it's not a huge move. I mean, well, where are we at right now? So that's 689.98. 98.90. I mean, it's about $1, right? So that's about $1, and then that would be $1.55. So it's about $1.55 to the upside on a back test. Yeah, you get the point. We've already touched that so many times, but let's just put a little text here. It's not going to look good when I go to larger time frames, but whatever. So again, like this would be the counter. I don't want to call it. I mean, is it a counter? I mean, I guess it kind of is, because if we're under, then I guess you'd call that a counter. So it's be a counter trend. Well, it'd be more of a short term. So I'd probably add that short term. Rolling. Yeah, that's good enough. I don't know. Whatever. People either will get it or they won't. All right, so that's that. Yeah. I mean, I could go on for days, but it's as long as market's below where we say, market can, you know, have the opportunity to maintain down. If we go back over said levels, then we'll be kind of more on the long side. But the problem, I think, not the problem, but also something I want to know. Wait, where is that? I can't see it. Oh, is it? It's there. It's just really dark. So I want to point out something here. This is also important, all right? So we are getting, excuse me. We're having I don't want to say it's choppy quite yet. I mean, it's definitely not a trending market. We haven't really been in a very trendy-ish market as of late. And what I mean is just pretty much, you know, kind of this in the sense, if you look at most of the price action, it's pretty sideways over the past month or so. But you know, like this breakdown here, just a big gap down, 1 day down, then back. This rally was okay. Then we have like a 1 day short followed by like up and then straight. So we're not getting super big trend moves right now, you could say, for a couple days at a time or like a weeks at a time. But either way, this is something we pay attention to, right? So you see how we have 10 SMA below 50 SMA, and then right here 10 SMA above 50 SMA, and then right here 10 SMA below 50 SMA. So what that means is obviously the only way you get the market to have that sort of continuous back and forth cross. Hello, sir. How do you pull a VWAP? Sorry. Glad to catch you streaming. Hey, Corey, good to see you. It's been a long time. I recognize the name, obviously. But yeah, so, yeah, it's, who knows, all of a sudden the streams work again after so many years. It's weird. But, yeah, good to see it. How do you pull a VWAP? It's on TradingView. There's a bunch of videos on that somewhere on the internet, I'm sure. But ultimately, you just find the Anchor VWAP tool, click it, and then just click a candle on your chart, and then it's going to populate. And then from there, you can adjust the settings of that volume weighted average price by right clicking and so on and so forth. But we normally use, well, there's 3 settings we pretty much use: open, high, low, close, low, and high. And that's pretty much it. More commonly low and high for me, but more recently I've been looking at some open, high, low, close stuff. Just depends on how it works. But yeah, so yeah, I don't really know what I'm trying to say anymore, because I feel like I'm just always repeating the same thing. But I guess that makes sense, because that's, the market just kind of repeats the same thing over and over. I see. Yeah, so, and I meant to, not that I meant, yeah, I mean, I was thinking about it. I don't think it's anything, not that I don't think it's serious, it's just, I can't use what happened the last time and then think this is the same thing, because it's not. The last time that we had that big algorithmic wick, I think it was down to like 264 or 270 or something like that. That happened during the live trading hours market. So, and we all watched it happen in real time, like right during the live trading day. So that's something we normally don't ever get. So that wick that we just saw there on the daily chart, though, I don't know when that actually happened. I don't know if it happened during the trading hours or not, because obviously I didn't see it in real time. I just saw your message, but it would appear that that didn't happen during the trading hours. Maybe it happened during the after hours. And then even still, it wasn't populating on the lower time frames. It was only populating on the daily chart, at least for me. So I don't really know what to make of that. So it's interesting for sure. The circumstances are different from the last time, so I can't judge it the same. That's where my brain's going. But and then also 69 almost seems like a joke, obviously. Yeah, I don't see 69, but maybe the golden pocket of that could be something debatable, right? But so it's in the back of my mind, you know. And obviously, you know, me, Brandon, and some others, we've been thinking that maybe into 2026 we'd start seeing some market turmoils, and maybe things go down, maybe some recessions start, who knows. And if it doesn't, then okay, great. If it does, shit, is what it is, I guess. But, you know, if that does end up happening, it would be interesting that in the year of 2026 we just saw this big algorithmic candle down to $69 on the S&P 500. That would, you know, so you know what I mean? It's just, so that's where I'm kind of thinking, I'm like, you know, when Brandon, you know, we talk about strategies and things all kind of coming together, it's kind of one of those things, is like how many things are starting to line up before you can't deny it, in a way. So we'll see. You know, we kind of thought 2026 would be a little shaky. You're seeing the precious metals markets move crazy. You know, then you see that wick down to 69. That's interesting. So we'll see, I guess. And I have no idea, but yeah, we'll see. Yeah, and also I guess if the SPY went down to $69, then yeah, I mean I'd probably be living in a tent at that point. I think a lot of us might be living in a tent. Shit, even Bill Gates might be living in a tent at that point. You know what I mean? So, all right, well, yeah, let's get back to the market. I would like to emphasize with the back and forth crossing we're getting in the market, that's generally, you know, signs of an uncertain market. You know, there's so many different rules that I have for these systems. You know, one of these days I really just gotta kind of, I always say this stuff and then life gets busy, but one day I will actually maybe create just like a quick file people can get in the description, like a little Google document or something that kind of goes through multiple different scenarios, and because like right now, as I was just mentioning, the market has so many back-to-back crosses right now on the specific SMA system that generally speaking, you would, not generally, just in general, right? This is the only way you get SMAs to cross each other frequently is you need back and forth price action, right? Now, granted, simple moving averages can be a little delayed from price action, but nonetheless, when you start getting back-to-back crosses like that, you're clearly not having trending moves. So it already tells you market's somewhat indecisive. So, like the other day, like yesterday, you remember how we're like, yeah, we're swing long or have a long on because we're over the SMA, and then the market just came right back down, right? Even though we were swing long and had a long play on the other day, we still mentioned yesterday, like, hey, market's probably going to sell down and we're going to go to here and blah, 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 blah. So even being long, we were still pretty much directing the markets down to here because it's just probably what was going to happen, right? And part of that thinking is because I can see markets are doing the back-to-back crossing, so that already means indecisive markets where you're more likely to see whipsaw action. So again, all these things lead into creating price action of the market, I think. Good morning, Bless 7707. Daily SMA touch during yesterday's price action and then bounce. Maybe what you're thinking, I would imagine you're probably thinking that low. I'm not sure. I haven't really. Yeah, that's what you're thinking. Yeah, so that's the daily 50 SMA. And so this is kind of the one thing too, is if you that I kind of like about, and really it's the truth for any simple moving average. But if you just use, like in this instance, I'm just using the 50 SMA. It's just one moving average, but the rules are the same across every single time frame. If you're above the daily would be uptrending. Therefore, anytime price action pulls back down towards the daily can still be used as support until proven otherwise. And then, that's, those are all the... But anyways, so that's a daily 50 SMA bounce there. And actually, kind of like that idea. Now that you mention it, might be something I add to my repertoire. But if that's a daily 50, I might... Yeah, you can see it. I mean, there's a pretty decent WW pattern down there, too, off the daily. Ooh, off the daily. I mean, pretty much down. But anyways, it's a daily 50 SMA bounce. So, and what that daily 50 SMA bounce has done has taken us back to the short-term market maker trend structuring of the market. So essentially this is a long-term uptrend bounce yesterday back to a shorter term, what I consider the market maker structuring of the market, right? So if you want to be on the right side of the market, how we're trying to structure markets in short term and whipsaw shorter term trading environments, then you generally going to be following the 30-minute, right? So that's how you keep yourself from being like, if, for example, like the other day we're long, and then once it comes to here, market, nope, it's short and it's bearish. So within a day's time, we went from being long to directing markets, it's all bearish, right? Because we're following that market maker structure, right? And then market tanks. But anyway, so that's the 30-minute structure, a little bit what I consider to be market making structure. What am I? Oh, I'm on SPX. That makes more sense. All right. So let's just get back into here. What time is it? 9:27. All right. Well, I'm going to take a second. Where did that go? Wait, I don't need that up there. As far as like Tesla, Amazon, Nvidia, Google, all the big name stuff. Oh, snap. MOBX. I have a position on that? Oh, no, I took it off. That's okay. Now, what did I going to say? Yeah, we'll follow some of the big name stuff. I finally got my chart. Like I said, I've been moving and anyways, but we'll be following all the big name stuff today too, and as we normally do. But like we mentioned, guys, just be mindful that currently, right now, as it sits with this, wait, is this, should I be on a 30-minute? Yeah, maybe a 30-minute. There we go. Maybe I should make this a little more clear. Slash counter target long. So yeah, again, as we mentioned, like if the live trading hours wants its back test, we just expect price will get bought up into a long straight to like 690.92 to 691.45 today. AMD took a you said a wild swing or something. AMD took a wild tank. Yes, AMD did drop quite a bit. 929, 32 seconds. Yeah, if we looked at AMD real quick, I'll just slide this over. Yeah, oh, that's supposed to be on extended trading hours, equities. There we go. All right, so if you look at AMD, go to a 10-day, 30-minute. All right, so we know that AMD has already been kind of rolling to the downside, and as of recent, any push to go into an uptrend has been rejected and right back under. And yesterday, or into the after-hour session, right, they hit the 50 SMA. So the market rejected the 50 SMA yesterday right into earnings, and there's your drop-off. So remember, algorithms run the market. So this is all a great setup for computers, right? They back-tested resistance into the open for AMD, right into earnings, and then dropped it out. But anyways. Let me shrink this down. Sorry. Whoa, there we go. Alrighty, so let's see. Out of all of our big name players, there is only one. Wait, yeah. Out of all of the big name stocks, there's only one stock that's currently positive on trend, and that's Amazon. Other than that, or sorry, that's Google. Amazon's bearish, it's negative, right? Netflix is negative, Nvidia is negative, Meta is negative, Microsoft is negative, every single large name is negative, and then obviously AMD with its earnings gapping down is negative. So all of the big name stocks that we would, most of the internet follows, they're all negative. And Google is pulling back down to its 50 SMA. So there isn't really a whole lot of the big name stocks that I can visually see that are helping the markets increase today. So obviously if some of that changes, then maybe it would help the market not go down. But do remember, right, that the market broke down the 50 SMA yesterday, and the volatility market is currently over the 30 minutes. So that means there's volatility in the markets right now. Fear is here. So obviously we're not long biased, right? We described that this morning. We mentioned we took a short on the top of the market in the pre-market session. We've emphasized that there's a little bit of volatility here, right? So, and then obviously the 50 SMA or the market is below. Again, it's just bearish until stated otherwise, right? So that's the way we got to be leaned until something changes. Obviously it hasn't changed, but So, it's all marked there, right? So this was a 50 SMA back test. Market is in a neutral to bearish state. Neutral, when I say neutral is because, it's like a foot off the gas pedal, right? If you're a long bias trader, that you could wait, right? You don't have to be short, right? You could wait, and then if you go back in and up and above, then maybe we can go back to the long, right? And now do remember, this is short-term stuff, right? If you're like yesterday, I bought the low. Well, I didn't buy the low. I bought towards the close of yesterday in our longer-term M1 portfolio for YouTube, right? Because the market went on sale a bit, so I said, whatever, I'll buy a little bit. You know, it might be early, it might go down low or whatever, but for long-term purposes, I mean, yesterday market was on a little dip. Yeah, whatever, I buy some, right? But in the short term, you know, we haven't broken above levels that would tell me I should be buying the markets long for short-term trading purposes. So obviously, like we said, the market maker structure, the short-term market I don't want to call it manipulation, but you know, that's it, structuring, right? The shorter-term trend structuring movement of the market is currently downsided until the market says otherwise. All right, are there any, wait, hold on, let me turn this to day. Let me change this down. All right. Yeah, I had a small position on MOBX earlier, made small bit of money and then took it off, and it seems to be doing okay. And then there was something else. All right, what is this? That's kind of interesting. My gosh, I think it's just goofy. Figures. Now I say the ELPW stock actually looks pretty decent. That might have a long target up to $2.02 today, arguably. So we'll see. But again, yeah. ELPW penny stock. Tried to take some long there, wasn't able to because I'm trading my Roth IRA account. And they restrict trading on a lot of penny stocks, but that's okay. Might have to reopen a different account or just kind of fund a different, better broker for some of the penny stock stuff, just because the Roth IRA is not allowing me to do a lot of that stuff. But anyways, that one kind of looked interesting. So right now we have the market kind of bouncing a bit. You guys already know it's basically just going to where we said it was going to go anyways, right? When that little sell move ends and the live trading hours goes for its back test, it's going right up into, again, that green box. So pretty much what's going to happen here is market over the price of 690.75 arguably shoots it back up into 691.47. Now, if we go look at see SPX, so like SPX, right? See where its 50 SMAs at? If the market's going for a live back test, and when I say if it's going, I mean, it's very common to see that happen. We would shoot the market back up into, well, let's just check SPY too. Let's double check this guy. Yeah, we would shoot the market up a little higher. If that pre-market VWAP holds resistance, then obviously we don't, but that's the only little snafu there. Let's go back to the extend. Oh, did I delete that? I did. So it would be like here to here. All right. So you see how he ran up into the volume weighted average price there, got a little bit of resistance. Ultimately, if that resistance doesn't hold up, then the shorts from the pre-market top squeeze themselves out, and then we're going to see the price jump up into 691.56. And if we get over 691.56, then we could see a little bit more long. But as I said before, that volume weighted average price right here at the price of 691.01 is current little like volume weighted average price resistance, blah, blah, blah. Got to get above that. Once you do, then you can see the market actually do something, or like go up, sorry. But otherwise, again, we're just still downside, right? Also, ELPW is now at a price of $1.82. Like I said, that's good chance that goes up to $2.02 here, so just keep that in mind. I'm gonna take a second. I need to look around. There are still, we still don't have, we have some, the Magnificent Seven are moving up, but they're not quite positive. Like literally none of them are positive. But that might change. Yeah, we'll have to wait on those. Like again, I'm seeing them go up, but they're in negative territory. So if I were to show you what that really looks like, right? If I bring this up, right? So this is the combination ticker of, you know, Netflix and Tesla and Meta and Google and Nvidia and blah, 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 right? So we can see they're bouncing, right? So obviously the market's kind of holding up, right? But if I go look at all of these equities on their own charts specifically, we can see all of them are below the 30 minutes besides Google, right? So we're seeing basically what we would, well, where's that? We would categorize what we're seeing in the markets right now is these big names are basically in bearish territory, but they're going through little bounces. So they're getting bought up in their sell-offs, right? And in the real time, that's creating some, you know, green candles across the combination ticker, which is ultimately just creating a little bit of this kind of bounce that we're seeing going on, right? You see that? You see this little bounce going on. Look at the pattern on the S&P 500 here. Then look at the pattern here on the combination tickers of the Magnificent Seven. It's pretty much the same thing. And then we realize that's just kind of because of the bouncing that's coming up off the market. Why is that? Why is it like that? I don't know. I don't get that. I'm not sure why it does that, but one day I'll figure it out. Anyways, I'm going to stop sharing every single screen and moving it over. It's just becoming too much some of these days. So I guess you're just going to have to trust what I'm saying half the time. You don't always need to see what's going on the chart because, you know, then I'm like moving and it's just, you know. I try to make the stream as fun as I can with always trying to show like every little nuance, but it does become relatively challenging at times. But yeah. Let's see, why is that? I don't know why it does that. That's just weird. Whatever. All right, I'm going to take a half a second here and just kind of run through some stuff. Damn. Ripper. Oh yeah, that's the one I did want to follow. Kind of missed it maybe. It doesn't look great. That actually turned out not bad. Let's see. Oh, yeah, it's actually not doing too shabby. All right, market is jumping up. Again, I would assume that the SPY and SPX are going for their 50 SMA here. So arguably SPX up to like 6,941, well, 6,941. SPY back to like 69156. Let me double check. Yeah, it's pretty close already. Just a 69158. Yeah, somewhere in that area, arguably. Yeah, we got, like I said, we got that small push, but again, it's just the market we're in. It's not. I mean, we're not in a super long bias trending market. And then what else was I gonna say? Yeah, and then again, it's until you get over that 50 SMA, the market's not really, how do I say it, long bias, I guess. Interesting. What is? I do not remember doing any of that. Sorry. Yeah, so anyways, let's go check on, oh, it's still halted, never mind. BYAH, yeah, looks like garbage. Cheap, kind of moving. That's interesting. Sorry, I'm just kind of looking around. Do you buy any type of REIT shares for dividends? I have in the past, and I thought about doing it recently, but I haven't. But I used to own some. I used to own some cell tower REITs, some, I think, data center REITs, Iron Mountain, some like packaging stuff. So I have. I don't think that I'm not saying they're bad or not necessarily good or just, it's just a different form. It's just basically real estate investing without, having to own the real estate physically yourself, I guess. Maybe a good way of putting it. Come on, market, do something fun. Let me bring up the VIX. So the VIX is still positive in that regard. The VVIX is now downsided, so that's good. So the VVIX is actually broken down, so that, yeah, I would assume the markets are going to kind of keep pushing a little bit here. Maybe a little late to mentioning that. Not really. I mean, you guys know we're probably working ourselves up to, again, the SPX 50 SMA, the SPY 50 SMA, which arguably is like kind of already happened, which again is that blue line. So what I wanted to... Basically, the hedging of volatility has slightly been taken off this morning. So basically, there's kind of been a slight catalyst to be additionally long bias the market this morning. So even though the price is below, right, you can see it's below the 50 SMA, right? So normally that's a neutral to bearish day, but there was a signal that was generated on the VVIX, which basically says hedging of volatility was taken off, which means go long markets even though they're under the 50. Go long to basically take them back up to the 50. So yeah, anyways, that being said, we're only suggesting market up to the 50 SMA on the SPY or SPX. So arguably, the market is just basically coming up into a potential resistance point still, right? Until the market is above that level, we can't consider that the S&P 500 is positive, right? We're just simply using, right now, this breakdown right here. So the market on the VVIX just broke down, so that's a slight reduction, or, yeah, I guess reduction, in those that are hedging for downside risk. So if those that are hedging for downside risk are now not hedging for downside risk, that means that there's probably some upside to be had, therefore optimism of pushing the market up, etc. So that's pretty much what we got going on right now. I would say there's really I can't say there's any long trade that's really been generated on any of the Amazon, Google, Netflix, stuff like that. I'm looking at the 50 SMAs and seeing if we go positive, see if there's any trade to be had there. There's no trade that I see on any of the big name stocks right now in terms of entry. Again, remember the market does not last very long at entry point. It usually spends most of its time outside of entry point. So nonetheless, that we're still kind of watching, but yeah. Remember what we just said. Remember, the market is basically just kind of going long up into the 50 SMA. It can still be resistance because that's just how the market works, right? If we go back to the SPX and we go back to the 30-minute and we just make it a simple moving average chart, what do we know? We know the price of the market is below the SMA and we're bouncing up and we're not above. So this is a bounce to back test until proven otherwise, right? So we're in a neutral to bearish state on the market. We are not in a positive trending market for the moment. Let me bring this back over here. Volatility is, volatility, that's another thing I want to express too, because so volatility, VIX, is still positive, but those that are hedging for downside risk took it off the table this morning a little bit, and that's what allowed us to bounce the market some. But if we look at the volatility index, remember, it's still positive. Let me bring up the 30-minute here. Sorry. I don't know why this one overlaps this one. I don't know why it does that, but for some reason it does. That is so goofy. Oh, I have no idea. I really don't know. But anyways, see VIX right here over the 30-minute just basically means the VIX is still positive. We're still in a somewhat elevated volatility market, somewhat fearful market. So obviously markets are still kind of, if you will, staying down. But we just used some of the VVIX breakdown to take the market long up back to resistance at this point. Also, if you look at the Magnificent 7 tickers, obviously they were bouncing and now they're all fading. So all of that long, remember, right? So all of the bouncing on the big name tickers, remember we said they're all bearish, they're all negative, but they're going through a bounce. And that's what allowing us to take the market up for the moment. But ultimately they're having resistance now, so markets are coming down. Yeah, so as we mentioned, basically at the start of today's pre-market session, it's a neutral to bearish market. It's not positive. So all you can do is basically stay on, well, it's still just kind of like a swing short market until proven otherwise. In the systems I follow, I mean, you know, they're quick, right? You know, a couple weeks back, market's long. Right here on that day, market is neutral to bearish. There's the back test, market is neutral to bearish. The market breaks out, market is back to positive. Market pulls back, market's back to neutral bearish. So literally had 1 signal, 2 signal, 3, arguably 4, 5, 6 signals over the past couple weeks, because again, it's just price action around one level. Bitcoin is still down. Really no surprise. We know Bitcoin's in a bear market. We know that bear market was meant to start, well, supposed to start in October of 2025. We are going to be still got another year-long bear market, maybe, give or take. Price target's down to 58,000 right now, give or take. But yeah, so hasn't been an easy trading day in the short term. Obviously, if you look at the price action of the market, it hasn't been the easiest, right? We've had some moves up, little pull, yank down, et cetera, not super flowy, trendy. But, you know, as we mentioned this morning coming into it, you know, the market is kind of in a back and forth market. We're not in a super easy trending market for the moment. You know, maybe that changes, but it hasn't been the case. I do focus on the 1 hour, bless. So the 30-minute is the shorter. So the 30-minute, yeah, I mean, I use the 1 hour. 1 hour is a little smoother than the 30-minute. So 30-minute would be market making structure. 1 hour would be more like trend structure. And again, there's so many different ways you can describe something or try to, teach something. And again, every single time frame is it's a time frame. SMA is the trend of that time frame. 30-minute tends to be the market making structure time frame. If you ask me, the 1 hour tends to be more of the institutional trend trading level. So like when the 30-minute breaks down, right, we normally then look at the 1 hour, right? So again, quick description, right? If we look at the 30-minute, the market's below the 30-minute. So in the shorter term, markets are down, right? If we look at the 1 hour, the 1 hour is also below. So that's like worse, right? Again, the only way I can describe it is and actually this would probably be a good example back there. But either way, it's just 30-minute market making structure, 1 hour smoother trending structure. So like the same thing here, you see how the market's below the 1 hour 50 SMA. If we started breaking over the 30-minute, I would make the 1 hour the target and the next resistance point, right? But yeah, so I do use them. I use the daily, I use the weekly, I use 1 minute, 5 minutes, but you just mainly hear me talk about the 30-minute because if you focus on the 30-minute, generally speaking, that's a short enough time frame that you'll basically keep yourself on the right side of the market most of the time. But it's not slow enough that you miss the entire move, right? It's not so fast that it's not reliable. So it's the sweet point right in the middle where you tend to find the structure of the market's flipping, right? from positive to negative with generally some room to, take part in it, not be too late, not be too soon. And then the 1 hour kind of smooths that out a little bit for you. So, again, market is in a neutral to bearish state. We've been in a neutral to bearish state since yesterday. Those that were on the stream know that I was swing long yesterday, and then I stopped out as the market came down below the 50 SMA, because that's where the market can transition to neutral to bearish. Since the price of my stop out, the market had dropped significantly further. And if I would have held and then held into today, the market is now put in a bounce, then to a lower high, and is now continued down. So if I would have not stopped out the 50 SMA, the loss would be significantly more than what it ended up being. And since the market is not back over the 50 SMA, I am not able to go back swing long the market. And those rules in themselves have kept me out of, well, let's see how much the market went down. So from the stop out yesterday, the market dropped another $9. So I would have lost, in theory, well, not really because it was UPRO, but in theory, I would have lost $9 more per share by holding and hoping versus just listening to the system. So system helped yesterday with the stop out and prevented a potential $9 swing to the downside on position. So I actually learned this SMA strategy from another individual on the internet by the name of Trader B. Jones or Master B. Jones. That's what he goes by on Twitter. I don't know if he's still on Twitter. He might be on Twitter. I'm not even on Twitter. But yeah, so basically, I came across his stuff. I actually saw his stuff a really long time ago. But then I ended up using it. And then now it's kind of become like the core go-to strategy, because it's just so simple to follow. It takes basically no time to kind of really assess to a degree what's going on, and then from there I've layered on top of it all of my other strategies that I like. So this is kind of like one of those trend structuring things I think I was missing for a long time, and then I added that on top of it, and then from there all of my other stuff is really kind of just solidified. Kind of watching markets, analyzing them, having a good idea as far as what's going on. Then from there it's just basically not being a dumbass and throwing too much money at something and then basically risking all your money and losing. That's really the goal. So but yeah, it's very simple. Like I said, you're almost never wrong because it's the system, right? Like, if you have, it's just is what it is, right? It's the system, right? Like, you wake up today and the sun comes up, and then when you go to bed, sometimes the moon's out if it's a full moon or a half moon, and then sometimes there's no moon, and then you wake up and the sun comes up, and then sometimes it's summer, and then it turns to fall, then it goes to winter, then it's spring, right? You can explain it, it just is what it is. That's just how the system works. You just go to bed and then the sun comes up. That's the system, right? Just is what it is, right? When the market, right? When you wake up in the morning and the market goes over the 50 SMA, chances are market's going to go up. Unless it's a false move, which it could be, but otherwise, market's in a buy move, right? And when I wake up today and I get on YouTube and I start streaming and I look at the market and I go, oh, so the market broke down the 50 SMA yesterday and it's bouncing, but it's not market's in a neutral to bearish state, and voila, market's down $10 a share or whatever this morning, right? It's not me, right? I just wake up and the sun's up, right? I just wake the system, right? That's what it is, right? So you just wake up and you listen to what the system is telling you. And it's not perfect and there's nuances to it, but that's what it is. It's the system for you to follow. And it's pretty much going to tell you what's going on to a degree. There's a bunch of other little random things that go on, but like you wake up and the sun's up and maybe the wind's blowing at 10 miles per hour today and there might be a little sprinkle of rain here and there, and maybe a thunder goes, but and that's the same thing as a system. You wake up and it's a neutral to bear state. There might be a bounce in here, but then maybe it goes back. You can't predict everything, but one thing's for certain: there's a really good chance the sun's going to be shining tomorrow. Bitcoin pretty much not doing anything worth noting for the moment. There are also none of the Magnificent Seven stocks that are currently breaking over their SMA calculation that would signal to us to get long those markets. So we're not putting on any new long entry position to any big market cap Magnificent Seven stock because none of them have triggered worthy entry point. As far as penny stocks go, what happened to the ELPW recommendation? ELPW hit our price target and then some, so cheers to that. So, cool. I've traded full-time for many, many, many years. I've had some great years of success, some bad years and losses and what have you. I've done it full time. I'm a full-time landlord, real estate investor too these days. Used to be a full-time YouTuber. I guess I kind of would be now if I keep streaming every day. I've run trading education services. No longer kind of do that, still do that-ish. But so I pretty much trade full-time, invest full-time for, what am I, 32 now, so 12 plus years now. And I would say overall, I don't know. I don't really know if I really would recommend anyone ever getting into the business the way I did. It's a long, challenging business, and like I said, I've had great years of winning, some bad years, and looking back, it's like, would I change it? Probably not, but some of the heartache is annoying, and just the amount of dedication it takes to learn half this stuff and then control your psychology. But what I absolutely, suggest everyone learn investing and the importance of money and how money works and interest rates and finance and dividends and how to make money work for you. Absolutely. Would I direct people down the path of day trading first? Probably not, but that's how I started, and then I thought that was the way, and so then that's how I taught people to market. But as I get a little older here, maybe a little bit more mature, I think my perspective has changed drastically on that. And I if I could go back and maybe do things a little differently, I probably would make some changes. But life is life, But now when I look back at all, it's like, man, the amount of stuff I know about the market is just absolutely insane, And granted, it's the psychological aspect that, prevents you from making, drastic amounts of money, especially in my case. And I've done it in the past, but the human brain is just something, it's something interesting. It's hard to get over. Like something like my partner Brandon, still really I just call him my partner, but we've kind of gone separate ways, just because his trading has excelled in a direction that mine hasn't, and at this point it makes total sense for him to have his own service, his own business, and be doing his own thing. But what was I gonna say? But yeah, like someone like him is just an absolute monster when it comes to futures trading, right? And so everyone's got their different fit in the market. But yeah, so I've traded for many years, invested for many years, and I manage a big real estate portfolio now. So pretty much everything in my life, young adulthood and up till now, is pretty much has to do with investing, learning money, and trying to make more money work for myself and multiple revenue streams. And that's pretty much it. But yeah, what I would highly suggest most people not go into day trading as their first form of kind of like investing. And mine started off with long-term investing, but then shortly after that went right into short-term investing. I gotta say, it's probably not the right route. So, and again, like I said, most of the stuff on the internet for trading is just really not good. That's the way I see it, and everyone's got a different opinion. But I don't think most of the trading stuff on the internet is going to make you any money. I think most of the trading stuff on the internet is probably going to lose you money. I think most of the paid for advertisements you see won't make you money. Whether that come from, like a broker, or like a new prop firm trading service is like, we're here to help you. Like, nah, like that ain't it. And it's just because the industry is so hard, and that's really just it. It's not that the education and the stuff isn't good. It's just, the systems that you're trying to beat are so sophisticated, and with your own psychology and things that you have to master, it's a very challenging thing to do over the course of a very, very, very long period of time. So, yeah, that's that. So anyways, I hope that makes sense. Yep, there's still, at least for the things that I'm currently watching, there are still no entry points for any of your large name stocks. Unless you're trying to buy like an oversold bounce and reversal or something like that, I guess there could be, but that is interesting. Okay. I can keep that one on tab. That would be fun. Oh, I see it there. Oh, snap. That's nice. Forgot I put a position on a stock and I just looked back at it and it's working. That's always good. Probably. You do options, yeah. I honestly trade a little bit of everything at any given point in time. That's what I've kind of found myself having, because it seems like over the years, like I said, I did good, and then I kind of had some, kind of ups and downs, and it just felt like I was trying to force making money back that I lost, and it's almost becoming too hyper focused, it seemed. And then just kind of over the years, I've kind of just taken a step back. And now I kind of do a little bit of everything, and I find myself just kind of doing a little better, and being more consistent now than I have in recent years, it seems, just because I am just not as hyper focused on thinking that I have to get back some of the money that I gave back of my wins, and then just being too hyper focused on futures, or too hyper focused on options, or too hyper focused on equity. So as the years have gone on, I've kind of, I guess if you will, have gone into more of a portfolio management mindset, where I have multiple different accounts for multiple different reasons. And if at any point something looks decent across the board, then... One second. Yeah. So nonetheless, whatever. Oh my lord. Yeah. So as I was just saying, So the less hyper focused I am on one area, it seems that I do a little better, because then, it's just I don't know if you want to call it stress or just, again, just being too hyper focused on one thing, you miss opportunity elsewhere. So it just seemed as I started spreading risk across multiple different places, then trading has become, again, a little less stressful over these past couple of years, a little just more relaxed, right? Because it's just maybe it's just kind of just not having to try to force something. It almost seems for me. Yeah, Joe, no doubt. And like I said, that's exactly what it is. And I always preach to people, right? It's almost somewhat surreal because like it was weird. I just wake up and it was just easy, right? I just make money like no problem. And then I took a couple big losses, and then was battling those losses back, and then you get some of it back, and you give it back, and you guys know the whole story. And so. Or you probably have experienced stuff similar to. I mean, really, anyone who's traded to some degree of relevancy has probably experienced what I just explained. But yeah, it's definitely a psychological thing. And then there's also the running the trading education. Not that I don't love doing that, and not that I wouldn't, foresee myself doing that in the future. But again, it's hard to run a trading education service after what I would say is kind of having great success and then having, a string of failure, because, it's like, how can you be mentoring others while at the same time yourself, you're kind of going through some struggles. So, that's kind of what's happened over the years. And so then that's kind of why we've dissolved a little of the trading education, because I don't feel it's responsible as the mentor to, be having some issues with your own consistency then while be trying to run a trading room and things like that. And I know there's probably other people out there and other mentors that might do that or be in that situation. And so I felt that the most ethical and moral thing to do is kind of going forward was to not be doing that. And it's not that the things that we teach don't work. And then, like I said, it's just, the market is a very psychological place, and, but anyways, maybe I'm going down a little bit of a rabbit hole there. Let's see. But yeah, as far as the standard deviation trading, man, I would just wake up, kill it, no problem. But then over the years, see, like now what's happened, right, is like instead of just like running around looking for standard deviation trades, if one of them comes up, then great, maybe I'll take a stab at it. Kind of like silver. Silver is a perfect example, right? Like, SLV, we'll just bring it right up real quick. It might look a little off now because it's been a couple days since. I don't know why that thing is in the way like that. But if we look at silver here, so silver on the weekly scale just ran into the +3. So like if you think about it, silver hit basically +3 standard deviation like right at $109, right? So for hold on one second, 10 day, 30 minute. Yeah, so silver hit whatever price for like a couple days, the +3. Anyways, so like in this top zone, right, this yellow line, like that's the +3. So basically silver got up here and it stayed up there for about 3 days, and then within like a day and a half it dropped 30%, right? So, like something like that, like I was saying, selling calls up here, or if you get directional puts, but I know the volatility would be juiced, right? So that was kind of the main play that I would always look for, right? And it worked really, really well until I got caught into the GameStop and AMC basically scam system debacle. And people were running stocks up just so astronomically high, and I'd lose so much money on some of those trades. It just sucked. And many of you guys saw it, and you were there for it too. It's like lose 10 grand here, lose 20 G's there. Like, okay, this sucks. And you do those enough time, and they're like, well, shit, my strategy doesn't work. And then you get very timid, and all those things lead into not being able to consistently hammer the right trades when you want. So nonetheless. But what I've been noticing, it does seem that system and that strategy has been kind of coming back into effect on many things, like MSTR. MSTR was another one. So I've been noticing that it's been coming back around. So I kind of caught the spot of where a strategy works really good until it doesn't, kind of thing. So I got my taste of that reality, unfortunately. But looking at MST, why does this? Wait, what is going on with this MSTR chart? Am I doing something wrong? It just doesn't. Oh, I'm dumb. I know, I'm an idiot. It was more than a year ago. So this top here on MSTR, back here, this right there, that was a +3, +4 standard deviation move. So, and I was on Twitter at that point. I'm like, hey guys, MSTR is going to top. It's time. And then, so basically MSTR, you know, the standard deviation strategy has called the top of the MSTR market for the past 500 days, 452 days. I know, all Roaring Kitty's fault, you know, jerk. Anyways, so that's all good stuff. Again, there are no big name stocks that are currently triggering buy moves that would be worthy of us taking any position on, but when the time comes, we can maybe do so. Where is that? Okay. Is this, you know, I'm looking at this PHOE stock. I don't love it. I'm just saying it could be at a breakout. This shit might get crazy. I don't know though. Regardless, my broker won't let me participate on it because it's a Roth IRA, but I will bring this one up because this is kind of like an interesting learning example. So if we look at PHOE, right? So this is another, so look at this stock, right? Maybe like that. That one's doing okay. That's good. PHOE. So I'm not long this. I got no position, but you know, this is kind of interesting because, wait, that's not right. 10-day 30, 10-day 30, here we go. So this is kind of interesting because this thing ran all the way up to $133, did whatever crazy scammy manipulation shit that is, but anyways, it's coming into its 30-minute trend right now. You can see that, right? See it right here? So this one's coming into $24.75. That's basically the 30-minute over-under for that play, that stock. So if we go into pre-market session guy here, looks like it's halted actually. Might be. Yeah. All right. Yeah. So, and the reason it's halted is because it's coming into the breakout level. So if you look, right, this is the 30-minute 50 SMA, 30-minute 50 SMA. All right, so you can already see how the market and the algorithms are working, right? So you see how it already ran directly to the 50 SMA and then stopped directly at it, pulled back. Now we've gone back up to the SMA, and now look at level 2's halted, stocks halted, all right? Because the market rejected the SMA, and now look at, we just opened up and there's your breakout over the SMA, move, etc. Here's your pullback. So as long as the market on PHOE sustains over this 24-23, in theory it can be breaking up. Obviously it's super high risk because it looks very thinly traded, but the point of it is understanding the algorithm levels and how the computers are really moving things in real time, right? So you can see that perfectly, right? When you look at a 1-minute chart, the move up, the pull back, the move to, the halt directly at, then gap up over the SMA algorithm calculation, etc., right? And if we were again just to move this to a 30-minute time frame, right? Sorry. So you can see it's all right there. You can see where that 30-minute uptrend is trying to start, right? So you can see that's right there. So there it is. All right, and so going back to, sorry, we're gonna go back to here. All right, and so now you can see why we've, again, broken out, and we're essentially pulling directly back to it, right? So that's how that's gonna work. If this holds here, we can go higher. If obviously under, then it fails. That's kind of what you're looking at. So hopefully that was cool, fun little learning moment for you. I'm going to keep looking for some different penny stocks and different things that might make sense to trade. It looks like the market's obviously woken up a little bit. Probably QQQ, which I haven't actually really looked at today too much. But like Netflix is kind of bouncing a bit, moving a little bit in the right direction. Netflix actually looks pretty good. I'm actually going to take a little long on Netflix. I kind of like it. Even though it's not positive, I just feel like that bounce is going to continue. And maybe we'll take Netflix back up to the 50 SMA. So I'm going to put a little small guy on that. I'm kind of just hoping we at least take Netflix back to its 50 SMA, and that's priced at about, I don't know, what is that, 82.77 or something like that. Now, what would also help is if the S&P 500 actually goes back to positive. So we'll see. Or if like the SPX rallies back to the 50 SMA, that would help. Yeah, we can take this back up here. Yeah, that could work. That's cool. All right, gonna continue on my search. What time is it? 10:24. Yeah. Microsoft. That one's kind of interesting too. Yeah, so the danger with Netflix is obviously it's buying on a negative trend, but I don't know. I thought we just might continue the bounce and it might head towards its 50 SMA. We'll see. Microsoft is another one that's relatively interesting only because it's not too far off from its 50 at 423.51. So obviously if the price could reclaim that, you might have some opportunity there on Microsoft. Again, I think it's still too soon, obviously, because the market isn't into a buy move. So I could see Microsoft maybe being a player on the next buy move. And the reason I say that is just because, yeah, it's just the way it's set up. So if we take the markets back into longs anytime, later this week, next week, Microsoft might be a play we take swings on. And if it's not, and if it's Microsoft, maybe, I don't really say I like Amazon. Google's been doing okay lately. I also have earnings coming up. Volatility index coming back down. What's the VVIX doing? VVIX is back below the 30. Okay. All right. What am I doing? Pretty sure I was supposed to be doing an arts and crafts class here on YouTube today. I think I might have messed that one up. Damn. Should have taken a little bit of that one too. I need to start. Sometimes I just gotta start buying shit and just trusting myself a little more. So maybe I just need more money is what I need. So I can just buy everything I see. That actually is kind of interesting. So you saying after daily and weekly SMA takeover? Yeah, you are right. It is below the daily SMA and it is below the weekly, so it is a longer term down. So that actually does make it higher risk for a long. So we might. Granted, I mean, it can still go long, obviously, but it is in a downtrend. So right now, we really, I mean, the maximum target would be up to 421.91 there. And granted, we would need the market to go into an actual buy move for that to probably happen anyways. Speaking of, Tesla's in a daily down. Not a weekly down, but a daily down. Nvidia is in a daily down, not a weekly, I would imagine. Nope, not weekly. Amazon's still in a daily up. Actually, Amazon's coming off the daily. There. Got it. Come on, Netflix, keep on pumping, buddy. Alright, I'm going to continue on my... Ooh, actually, did I just find something? I think I looked at this earlier, but it was just... See, that's the thing, is like, you just got to differentiate between which ones you want to throw something at and which ones you don't. Yeah, I'm just going to pass on that one. Kind of interesting. What? As of lately, I don't really short penny stocks anymore. It's just not something I normally try to do. Mainly because, well, not mainly, but part of it is I don't like having to pay the short locate fee. I think that's basically a bunch of bullshit. I used to pay it, but and that's one thing I don't like is some of the short locates. But just over the years, I've become more of a long bias trader myself, it seems. But yeah. And the strategy for finding penny stocks to short is just basically letting them go up really, really high, and then many times go into a +3, +4 standard deviation area and short them, or pretty much whatever the internet is going crazy about, that's going to be something to short. But yeah. What's the perfect account for trading daily? I mean, that's a very, I think that's, I don't know, I think that's somewhat, what's the word I'm looking for? Subjective maybe. Because I have some longer term accounts with a couple $100,000. I have like a Roth IRA that I mess around on here that's worth like $5,000. I have crypto accounts that, 50, 60 grand. And so, like I said, over the years, it's kind of changed for me a little bit. It's come into more basically kind of like a portfolio management style of trading and investing for me. So I don't necessarily take one account with a bunch of money and go, I have to trade this and make money on this. I kind of just try to do well across all of my investments now. And by doing that, I've eliminated a lot of what I feel was the pressure to try to perform like crazy. And now I'm starting to perform well, if you will. I've had probably my better couple of years that I've had over these past like 2.5 years that I've had in a long time. I've brought in probably like close to like 100, maybe 150,000 across all of, well, not including real estate. If I take real estate out, well, if I added real estate, it'd be more, but across trading and different investment accounts and the positions in plays, I've probably done about 150 G's over the past like maybe like 2.5 years, and I was pretty happy about that because I come off a string of having some pretty annoying losses and then just basically doing this for like a couple of years, it seemed, and now I've and so that's come as I've tried to kind of remove myself from thinking that it's one account or one trade, and I've just kind of diversified, if you will, just kind of all of my investments in multiple different accounts. And so like the gold and silver play I did, the Bitcoin plays, some short-term trading plays. So, because like prop accounts, like if you look at like Brandon, like my older business partner and friend, right, he would trade prop accounts and crush prop accounts like crazy, right? So I mean, basically spending $50, $100 per account, and dude can still make pretty good money out of doing that. So it's like, do you need a 100K account to trade? Not really. If you could go just crush a bunch of prop accounts over and over and over and over and over, right? Maybe you do that. Now, obviously, those come with rules and stipulations. It could be somewhat preventative to a degree, but but at the end of the day, it's like, realistically, all you need is like 25 grand. You don't even need 25 grand. Hell, I use a cash account. Like the Roth IRA that I trade, like I can literally trade this every single day and take multiple trades, right? It's only like 5 grand, that one. And I could still trade a bunch of random stuff with that because if you just don't spend too much money, then you can keep recycling the cash, right? But if you want to take arguably a bigger position on something and keep recycling money, you'll need a margin account, right? So, but I'm just emphasizing that for people that don't have a bunch of money, right? You could open up a cash account worth a couple grand and you could pretty much trade every single day. You just can't make a ton of money because you have to, use your money wisely so you could keep trading in that account, if you will, right? So I would say if you want to be extremely active and not miss opportunity, then you would want realistically like a margin account with 25K plus, right? But if you're someone who doesn't need to actively sit there and try to trade every single thing and whatnot, you could have a cash account of 10, 15 grand, right? So it really just depends, right? If you want to short penny stocks, then you're going to have a margin account. You're going to have more than 25K. You need more than 25K because if you get caught in any sort of bad trade or really anything, you'd slip below that margin requirement and so on and so forth. VVIX back up, VIX still elevated, market still trailing down, QQQ actually just rolled over a little bit more there, all of which is not going to help the cause of Netflix, which is fine. Again, I took a very small position. It just in general, it's going for a back test log of the 50. If it doesn't work, I really don't care. Bitcoin still down, still pretty much doing nothing fun. What was I about to do? I'm looking through some more things. BYH. Yeah, right now I'm just basically running through some of the biggest gainers right now just to see if anything's triggering a long entry, which it probably wouldn't be because that's usually the case, but you never know. Damn, it's 10:39. I feel like we've been here for like forever today. Oh man, ow. Man. Shit. Maybe not shit. But, debatable. YouTube is funny. I love you. Gotta love YouTube. Gotta love the old YouTube Magoo. Come on. What is gonna happen that's even somewhat decent? Oh, let's check on, let's see, how is VHT doing? My healthcare play. Basically nothing. Okay, IHI. Medical device play. Not looking good. Damn. BSX. Down. Oh, damn. Figures. Alright, cool. Portfolio's getting smoked today then. Not really, but what was the other one? DIBO. Crushing. That's good. VXUS gap up while market is down. That's actually really surprising. Damn. Well, that's good. My international play is doing well, considering the market on the internationals has gapped up today while the United States market is down-ish, kind of. So that's good. Yes, bless. Have a good one. Have a great day. Hope you have a good day at work. Based on the way things are going, we should have a profitable day. Unless I did something stupid from here on out, which I don't think we'll do. What's silver doing today? Silver, not looking so good. Not looking good, but see what's happened on silver. You see how that 30-minute trend is caught up and it's moving the price. Not good. No, I'm just kidding. No big deal. Gold probably down some. Yeah, who cares? Whatever. Same old. Like I said, for me, for gold and silver, I sold so much gold and silver up on this run, like I said, helping me accumulate a pretty big gain over the past couple of years, that I am not too worried about it. I know some are probably super annoyed and super pissed off because, silver dropped a bunch. I am too, because obviously I'd made more money if it didn't, but I myself used the standard deviation strategy, so I knew that as we were coming up into here, I was liquidating, selling, etc., and then down 30%. So, yeah, I didn't sell everything, but yeah, I did really well on that. So I'm not really mad about silver dropping. I don't really care that it did too much, a little bit, but it was to be expected, right? It's totally normal. That's generally what happens when you come into those areas. So what will be interesting to see is how gold and silver develop for the next couple months after that. Oh, did I let this coffee go cold? Damn. Oh, man. Oh, Man, ELPW was an absolute ripper. So glad they wouldn't let me get that one. That's okay. I have to go back using my light speed. Well, looks like the market is doing the old slowdown, the old typical. Let's see. Oh man, such a busy day here in chat. Actually, it's been the busiest day in chat that we've had thus far. So, must be piquing the interest in the minds of some humans. Must be. Actually, that doesn't look too bad. Okay. Will you guys tell me what stock to buy? I mean, come on. Will you guys make me rich already? Oh. That's too funny. Literally, there really isn't anything that I think is worth doing anything with. No. Tesla's down, AMD down, Meta down, Microsoft down, Netflix down, hopefully going for a back test up to 82.43. If not, damn. Yeah. Yeah, I know. Again, like I said, every day when you tune into the stream, we're not going to just be slinging around stuff because, again, our entries for things, well, they don't last long, but they're very low risk. How's silver doing? Nothing. PG is actually doing pretty good. The Dow is actually doing really good. So that tells us that tech is meh. Damn, Berkshire spanking. Might just have to start doing the buy signals on this guy. 10:52, and the market still doing as it always does. Hey, let's go, baby. Yeah, so the guy started stalling my floor yesterday, and then basically was like, yeah, there's a lot of manufacturer defects, which is not wrong. I mean, I looked at them, boards aren't the right size. I'm like, damn, so I gotta return this whole entire floor and get another one. This would be the third time. I'm like, I'm just over it. I'm over it. All right, anything new on the scans? Did something do something that would make us want to do something? Let's see. So far, no. But you never know. Things could change. Things could change. Wait, hold up. What is this? ZCMD. We could be late by a sec. Yeah, probably. Gosh darn it. Now, it's really low volume, so it's not even worth it anyways. But so that thing. Yeah, so if it was going 10% a day, so it only triggers 10%. What's it got? How would that be at 55%? I mean, I guess so. Interesting. Yeah, there's really not anything that looks new. Maybe this, I don't know. CGTL, probably not. I mean, we're getting to the end of the day. Just low volume continuation off of 10 SMA. Meh. FISV. Sure. Let's see. Nope, not for me. Most likely. Just at first glance. Nope. Nope. And that's the weekly, and the weekly's all the way down there, so nope. Yeah, so that's a no for me, mainly because, I mean, pretty much every single time frame on that stock is downtrending, so I would just, anyone who buys it would be buying against pretty much the long-term trend, the short-term trend. There is no uptrend on that stock right now of meaningful manner, and then we would just basically have to get lucky and hope that it just randomly bottoms where we buy it. So for me, SFV is a no in terms of technical trend perspective. Know absolutely nothing about the company. Okay, is Netflix ever going to do anything? Or is it just going to sit and top short of the price target? Because that would be lame. Again, our price target right now for Netflix is $82.50. That's the hopeful counter trend target while it's in a bear market. So we're currently trading against the trend of Netflix in the hopes that we are smarter than the market and that it will go up to the price of $82.50. And if we're not smarter than the market, then the market just remains in its current downtrend and Netflix does not go to the counter trend backtest target of $82.50. And if that doesn't happen, then, as the saying goes, don't trade against the trend. So, to the gentleman that just asked me about B or FISV, perfect example. For all of the reasons that I just basically told you I don't want to long that stock are very similar reasons why the long that I'm on with Netflix may not work, because we're currently trading against the trend. The only time you do that is when you basically think you're smarter than the market. And right now, for whatever reason, I thought I'd be smarter than the market on Netflix. So far, it's pretty much done pretty much nothing. So, will I be right? Will I be wrong? Don't know. We'll find out. BOXL, low float. Yes, BOXL, absolutely. So I traded BOXL earlier this morning. It is a low float stock. It's got quite a bit of volume. The low risk entry points for that stock were down at the price of $1.23 and then at the price of $1.40. So unless you were entering at $1.30 to $1.40 area, I would see the entries as a little higher risk. And then even myself, I started getting long BOXL today at $1.82. So like for me, I traded BOXL today at $1.82. That was my first entry. So I was buying BOXL at a more elevated, riskier entry point than I would have liked. Only reason being is because I could see, just based off the way the stock looked, to me it was something that would continue above the price I bought it for. So the only time I ever buy something that isn't breaking over the specific levels, like the 50 SMA on the 30-minute or the 4-hour for penny stocks, or back testing them, if my entry isn't there, then the only time I enter is if, for whatever reason, I think that based off the way the market looks outside of those entry points, that it's going to continue in the upwards direction. From there, I'll just buy into the stock wherever I pretty much want, if that makes sense. So like BOXL today, like I said, the entry points that I would have really liked if I were actually trading that stock and following it, whatever, it would be $1.25 to $1.40, 42, 43, 44. I bought at $1.82, right? So I bought way above where I would really like to. And that's because I thought it would continue up, which it did. But then B, right? I would have much rather bought it at $1.82, or sorry, $1.40 or $1.25. But like I said, the most ideal good entry points do not last long at all. They last for minutes usually, right? So if you were going to get the $1.25 entry, you would have needed to buy the stock at the end of the day yesterday, right before the close, and then hold through the after-hour session to get that move at the ideal entry point. So that one would have been really challenging. The next best would have been the $1.40 on BOXL this morning, because that was a back test of the 4-hour trend, uptrend start, which, so unless you're paying attention to it then and bought it then, which obviously I wasn't. Then from there, I'm like, well, I think it'll move higher, so I just basically bought it myself. But yeah, so basically what I would say with BOXL is the move started at $1.25 and $1.40. If you're participating now, you're late, just like I was at $1.82. So you have to have the hopes that the stock is just going to go higher because you're no longer at the uptrend start. So you don't have the benefit of being early anymore. Now you need the benefit of continuation, right? If you're not early, you can't benefit from the potential of it just being a good play. Right? If you're late, then it has to be a really, really good play, and the market needs to just continue, right? Because, say you buy a stock at the beginning of an uptrend and the uptrend sucks. Well, at the beginning of an uptrend, arguably nobody knows if it's going to suck or not. So everyone's willing to at least try. And the willingness to at least try the uptrend on a stock will inevitably cause the stock to go up to some degree, usually enough to make money, and then stop out if it's shitty. But if you buy far away from the uptrend start, now you don't have the benefit of people that are just willing to try to get it to work. Now you need it just to actually work for you to make money. And that's the more challenging part, is to have a stock break out and then continue and continue and continue. All right, anything good happening? Probably not. Probably just a bunch of randomness. SPY still just basically doing a whole lot of nothing, which is completely fine, because right now that's the best case scenario for my portfolios. Right now, if the S&P 500 just traded sideways and did nothing, that would be the best case scenario for my portfolio. If the market goes down but not too aggressively, that would be a good case scenario for my portfolio. If the market goes down aggressively, then that would be like worst case for my portfolio, as is with everyone's. But then also best case for more buying opportunity. But right now, I pretty much hope that basically the S&P 500 pretty much just doesn't really do anything for like the next couple years, honestly. But I know that's not going to happen probably. But I don't think we're just going to have explosive, insane growth coming for the foreseeable future. Oh, come on, Netflix. Why you got to be lame? You tried to go for the old Twister Magoo, and now you're being lame. All right, well, at 11 o'clock, I think that's probably about time to call it. We pretty much went through everything you could possibly want to go through on a given day. I mean, we went through, every single stock on the biggest gainers multiple times. We covered the S&P 500. We looked at gold. We looked at silver. We've looked at Bitcoin. We've looked at the volatility markets, hedging of volatility. We've looked at the market internals for the day. So we've pretty much covered probably only like 1% of the stock market, and not even close to everything. There's so many different things you can look at, but yeah, we've done a pretty good job at nailing most of all the important stuff that most people in the retail space would want to talk about on a given day. So yeah, cool. I guess we'll catch you guys back tomorrow. Everyone, have a great day. See you soon.